China called for all-out efforts to strengthen infrastructure construction in the country. A top financial and economic affairs meeting chaired by Chinese President Xi Jinping made the call on Tuesday. Xi Jinping highlighted the necessity for China to build a modern infrastructure system and improve the country's capability to cope with extreme situations in an effort to coordinate development and security. How to interpret the significance of the push and what changes can we expect on the ground at what costs? I'm pleased to be joined via video link in Beijing by Charles Liu, Senior Fellow at Taihe Institute, an independent think tank headquartered in Beijing. Professor Gong, Vice President of Research and Strategy at the University of International Business and Economics, Israel in Tel Aviv. We're also pleased to be joined by Daryl Guppy, joining us from Darwin, Australia, an international financial technical analysis expert. Welcome to The Point, gentlemen. So, President Xi urged the country to coordinate development and security and optimize the layout, structure, functions and development models of infrastructure. John, let me go to you. How do you look at the content of such an announcement, because it's an all-out effort to modernize the infrastructure in an all-round way? It's significant, isn't it?
Absolutely. I think that this is part of the fiscal policy to jumpstart the economy. The investment in infrastructure has already been decided even at the beginning of the year, but now we're in a very dire situation. We know that the economy is just in a terrible shape at this point due to many lockdowns across China, across the land in many cities, and we need this fiscal stimulus to jumpstart the economy, particularly in the infrastructure side. When you look at the drivers economy, it's typically consumption, investment, exports. Consumption is doing terrible at this point. Exports is also slowing down, and only a viable option is really with respect to infrastructure. Even though you mentioned that China's infrastructure is noted for its impressive track records in the past, but there's still a lot of room for further improvement, especially I think the news about this conference has said that there are several areas that are not so much in the traditional infrastructure areas in the past. For example, in the railway, that's always been a very important aspect of infrastructure investment in the past, transportation sector. But this time it talks about ports facilities, inland ports facilities, a couple of other areas. So I think there's still a fair amount of room for continuous investment on the infrastructure side in China at this point.
Daryl, how do you look at the purpose that the Chinese leadership wants to achieve here? Is it solely about jumping-start the economy?
I think that's part of it, but it also fits into a broader range of policies. Now, we've talked about dual circulation, we've talked about common prosperity, and these fit into that particular structure. Although we sort of tend to focus on hard infrastructure development, it's the most visible, but we also need to look at infrastructure around trade settlement, the growth of the digital economy using computing, quantum computing, the reduction of business inefficiency. These are less obvious, but these are really important parts of moving out of the middle income trap. So you put all of these major policy statements together, and you have to put this announcement on Tuesday into that particular context. I think that's the most important aspect of doing it. Certainly COVID has pushed it in certain directions, but it's still very much on track.
How do you compare, John, this push for infrastructure construction, or stimulus plan, as you call it, with the plan in 2008, which was worth 4 trillion renminbi or $600 billion, which gave the Chinese economy and the world economy a much-needed boost at the time? How do you compare these two? Is it comparable?
Well, absolutely, they're comparable. But let me point out the major differences. One thing I've already mentioned, that 2008 stimulus package, a bulk of it is about railway. We have already had probably the world's most advanced railway system, so we're investing in other areas. That's one very important direction. The second thing I want to point out is that it has a dimension of national security. This has never been seen before. And I think it highlights the importance of defense of this country in the context of a very stable world at this point, unstable world at this point. Look at what's happening in Ukraine. Look at other flashpoints around the world. You know, we are a very large trading nation. We're the largest trading nation. We have the a very large component of our GDP tied to the global markets. And I think in that context, it is extremely important that we develop a infrastructure that is robust, that's resilient to these instabilities.
Right.
I think that's a major difference from the past.
Okay, let's take a look at more details in this regard. According to Xinhua, the meeting deems that strengthening infrastructure construction in an all-round way is of great significance to ensuring national security, smoothing domestic circulation, facilitating the dual circulation of domestic and overseas markets, expanding domestic demand and promoting high-quality development. Daryl, how do you look at the highlighting of national security here?
Well, I think national security is a broader concept than just what we alluded to before. What we have to look at is climate change. Climate change is a major challenge. How do we handle floods, typhoons, drought, protection and expansion of arable land? Now, these are all really national security matters. And we've certainly seen that in some other countries, like Australia, for instance, with droughts and floods and bushfires and so on. They require PLA mobilisation and mobilisation of a whole range of infrastructure improvements to prevent very bad catastrophic impacts from those sorts of things. So I think we need to separate the traditional national security focus and add to this focus of how we look at climate change as a threat to national security and economic stability.
Two more points on my mind at this moment, because China does mention to improve the country's capability to cope with extreme situations. So, John, what is your interpretation of what's meant here? For instance, does it mean a war potentially somewhere in East China or Western to the west of China? This is one thing, or somewhere else. And secondly, China also issued a guideline late March which talked about establishing a unified domestic market. This is something also deemed very important, which covers 6 major tasks like IP protection, circulation, use of resources. Is there a connection between the unified market push with this infrastructure push?
Well, first of all, let me say that no, I totally agree that there is an added interpretation of the added dimension of interpretation to this issue called the national security. The previous guest talked about the other aspects, and I'm totally in agreement with that. Now, when we talk about you know, in face of these
extreme situations
and other
right.
Extreme situation, right? Yeah. We probably talk about, you know, something more than just war. For example, natural disasters that are unexpected, you know, other unforeseen events maybe happening outside of our borders, but has a major impact on our economy. And I think all of these things probably all belong to the category of national security. So I think we need to be prepared for that. And you know, our economy has been advancing to a level that we can afford addressing these issues from a national security perspective. So that's one thing. The second thing about, you know, the relationship with the unified market. Let me say the following. You know, the idea about unified market is mostly about a competition policy issue. You know, this has we can trace the idea of market integration back to, you know, what happened in the United States, the Sherman Act, for example, in the beginning of the last century. Intercommerce, for example, extremely important in the United States, and here in China, you know, instead of interstate commerce, we're inter-province commerce, I guess, and also commerce between different regions. You know, after all these years of, you know, opening up and reform, you know, we still have a lot of things, a lot of policies, local policies that are still hampering the formation of a unified market. I mean, in economics jargon, we call it market integration. I mean, there's tons of economics literature about market integration. It's an important, very important role in contributing to the society's advancement,
right.
Economic development, for example. You know, the very famous Needham puzzle, asking this question about why industrial revolution didn't take place in China as opposed to in Europe. A major conclusion in economics history literature is saying that it's precisely about this issue, that the lack of market integration as early as the Song Dynasty and subsequent dynasties explains that. So I think that's a very important issue to
but not totally related
policy agenda here.
Yeah, but not totally related, maybe to the infrastructure deal. Right. Let me get back.
I think it's related, but not.
Okay, not totally the same thing. Let me get some time to Charles, who is able to rejoin us. Charles, from the money perspective, in 2008 it was 4 trillion renminbi, 600 billion US dollars. How expensive is the latest round of infrastructure upgrading going to be, and where will the money come from?
I think there are many new channels for funding. For example, many Chinese companies are now using the Luxembourg green exchange to raise green bonds for the new materials and new renewable sources of energy and the carbon capture innovations which are being put in place here. Because part of this new infrastructure plan is green and looking to improve the carbon emission standards all over China. But I think, I because of technical difficulties, I couldn't get in. But I heard comments by your two guests and you on security, national security. Right. I think one of the things which is really we have to look at seriously is potential sanctions. If it comes in what does that mean? How do you continue to maintain efficiency in your supply chain? How do you deal with enhanced efficiency so you can continue to be competitive despite sanctions? We've seen what is possible for the West to do, what level of sanctions they could apply to Russia, and potentially that could come to China. So I think a lot of what is being talked about today is in preparation of disasters, natural disasters, but also human-caused disasters, which can befall on China, and it could happen very soon.
How, from the reaction of the markets immediately, for instance, the market re-jumped, the stock markets rebounded. Charles, let me stay with you. How do you look at the potential effectiveness of this round of push in terms of stimulating the economy, giving the economy a much-needed boost, and also boosting national security?
Well, I think in terms of the boost, it's not going to be really very significant because the amount will not be the same, and the dry powder or ammunition that the central government has is significantly less than, let's say, a few years ago before the pandemic began. But ultimately, you have several pillars. Infrastructure is one pillar, real estate is another pillar. But I don't think there will be further stimulus in the real estate sector because that would create a bubble. Right. It's quite dangerous.
Okay.
So export, maybe. So what is left is infrastructure. But digital infrastructure is something new and something that will be promoted significantly.
Right. Finally, let me get back to Daryl, because you have been nodding. You seem to agree with some of the points that Charles was making. How do you look at the potential effectiveness of this push, and maybe also a potential risk that you foresee?
I think the most important aspect is the development of a digital economy. Now, this is a structural and philosophical change in the economic structure of China. It's already well down this path, and I agree with what was being said before, which is why I was nodding my head, of course. So we're looking at international capital attraction, the use of domestic capital as a market investment rather than using taxpayer money for financing this, greater use of infrastructure and project bond issues for both domestic and international fund managers, offering China debt instruments that are similar to US treasuries. Those are the factors.
All right, we're going to leave it there. Many thanks to our three guests: Charles Liu, Senior Fellow at Taihe Institute; Professor Gong, Vice President of Research and Strategy at the University of International Business and Economics, Israel Campus; and Daryl Guppy, International Financial Technical Analysis Expert.